I would say when I'm able to work with somebody in a planning process and help them meet a goal or educate them on something that they didn't know about that makes a difference to them, that makes my heart feel as good as it can with what I do.
What will you do when your money works for you? Welcome to the Tech Girl Financial Podcast with your hosts, Victor and Kim Gaxiola. From the home office in California, here is Victor and Kim.
You know, Kim, when I think about the financial services profession and what we do as financial advisors and helping people make decisions about their money, I think the one profession that comes closest to being kind of a nice marriage is a CPA. And so today, in the continuation of our financial professional series, we're so excited to have Lisa Silva join us, who is a CPA and who I understand really loves taxes. Of all things, taxes. Not paying them, but helping people with the taxes. So welcome to the program.
Thank you very much. I'm honored to be here.
Yes, and I'm so glad we have people like you doing our taxes.
Yeah, I stopped when it was like the 1040 easy, right? And that was when I worked at McDonald's. And then after that, it got too complicated. And said, now you need to work with someone.
Yeah.
Oh, I know.
1040 easy doesn't exist anymore.
Right. I guess it wasn't so easy. So tell us a little bit about your background and what brought you to this profession.
Sure. So my background is I grew up here in Morgan Hill, where I currently have my practice. And I graduated from Santa Clara University with an accounting degree. And straight out of college, I worked in industry as an accounting manager. Mm-hmm. I did that for 2 years. Had a great time, was able to travel and see a side of accounting that I didn't really know existed prior. Then during that 2 years, I studied for the CPA exam and passed it. And then once I passed it, went out into public accounting so that I could get my experience requirement met and get licensed by the state. And I was very fortunate that I was able to work at a regional firm that allowed me to work in all areas of public accounting. I was able to do financial statement audits, tax returns, bookkeeping, payroll, the whole gamut, and get my experience and then decide which area of expertise I wanted to focus on. And that was tax from the get-go. For some reason, I just loved it. I don't know why. It might be the people aspect of it. I get to really work with people. I don't feel like the bad guy auditing their financial statements and big scary person. So yeah, that's what led me to where I am now. I did eventually leave that firm and come to a firm here in Morgan Hill where I spent 15 years and focused my time on strictly tax planning and tax compliance for high net worth individuals, small businesses, multi-state corporations. Also worked with public companies and private companies doing their income tax footnotes for their financial statements. But my heart really lies in dealing with individuals and their families and their small businesses. And that's what I focus on in my practice now.
Wow. Well, God bless you for loving the tax preparation, the tax planning. I got a little cringy right there when you said tax compliance. Oh, wow. That's a tough one. Were you always good with numbers?
Yes.
Really?
Yes.
Yeah.
I have to believe that you like loopholes too, because in the tax law, it's like exclusion this and exclusion that, and trying to figure out the best way, right?
Yes. It requires a lot of reading and education and some creativity sometimes, but yeah.
And it's fun. I think I was reading something yesterday and it was like something about tax, but they said, and there's one exclusion to this rule. And they say, click here to get to the IRS website and look at the exclusion. And I started looking at it and I go, it's too long. It's not very black and white. I'm done.
It never is black and white when you get to the IRS, code sections. It's never black and white. But
I know.
Yeah.
Well, so you operate a lot then in the gray areas if it's not so black and white. And so can you share with us, situations where perhaps you've made difference in the lives of the clients that you serve?
Sure. I don't know if it's necessarily a gray area aspect of, what we did, but, there's numerous. I can speak to some of the most recent, which have been some of the closest to my heart, I think. So I had one person call me up, found me. I don't know where they got referred to me by someone that we work closely with. And he had been preparing his own TurboTax tax returns. He's an engineer, had lots of stock option income, and came to me to see if I would review his tax returns and see if I could find areas that he may have missed some deductions or things he could do differently going forward. And within 2 minutes of pulling out his last 3 years worth of tax returns, I could see a huge blatant area of missing his cost basis on his stock options that he had sold. And just in those 3 years, I quickly added things up for him, and I told him, I think you left $30,000 on the table in 3 years.
Wow.
And there's more going back, but we can't amend those. So I amended his tax returns. He ended up getting $35,000 back in those 3 years. And I also educated him as to what he did wrong, because he would like to continue preparing his tax returns going forward. So he is now going to hopefully do it correctly. And so that was, $35,000 is a big amount of money that someone didn't realize they were going to get.
Seriously.
Yeah.
Wow.
That is a lot of money. And so what are the situations where people, is it exclusively tax preparation, or do they come to you with different things as well?
Come to me with different things as well. I mean, as recently as yesterday, I had one of his wife's coworkers referred him to me. I don't even know who she works with. And he just wanted a second opinion on his tax return and how he could possibly save some additional taxes, more tax saving strategies, wanted a second opinion. Most people come to me because they want their tax returns prepared. I also work with people. I've had people come to me who prepare their own tax returns, get selected for audit, want some representation with the audit, and I will do that for them. If I can, if I review the return and feel that I can support it, I can do that. And I've done that successfully as well.
And so it sounds to me, though, is there a lot of changes as far as like tax laws are concerned? Do you have to stay abreast of all these changes, and how do you do that?
Right. So as a California CPA, we renew our licenses every 2 years. And as part of that license renewal, we are required to get a minimum of 80 hours of continuing professional education. A certain number of those hours has to be in technical subjects, so not things like marketing or how to use Excel, things like that, which are important, but don't qualify as technical. They want us to get that technical knowledge. And then as a CPA and practitioner, I'm able to choose which areas I spend my time educating myself. So I do various things, with the new tax laws that came out last year. Most of my time was spent digging through that and figuring out, how can I help people? What changes should be made ahead of time? How can we plan for this? I've had years where I focus on trusts and estates. It just kind of depends on what's going on with my clients, hot buttons that might be going off, and where I feel like it's been too many years since I've had an update, and then I'll spend my time educating myself there.
Yeah, I think it's funny because they said that taxes were going to get simple. And that one page is the main page, I guess, that has all the summary on it is kind of simple. But I could not believe how many more schedules now are in a tax return than there was in the past.
Yeah. And last I heard, this year, we're going back to the old format. We're not going to have the half-page postcard with all the schedules behind it. I think it's going to be back on one page or 2 pages again, and fewer schedules behind it.
That's interesting. So it's the same tax law. It's just a different format.
Yes.
The form.
Yes.
Oh, okay.
I mean, there are some other tax law changes. There were some new lines for the qualified business income deduction, and lines on the tax returns change.
Yeah.
Almost annually, you'll see lines on the tax return that say reserved, and as credits come in and out or deductions come in and out, they're able to use those lines as they come about.
So one thing that's interesting, we're going through this right now for ourselves because we have a daughter that's a senior in high school. And sometimes we are heard we have to be really aware of how our tax returns are during this period because of how you report things on FAFSA. And we were at that meeting the other day, and I was surprised because I was thinking if I asked a lot of questions. Mm-hmm. And I think I asked a lot of questions because I have a high level of knowledge about taxes, and I could see people misreporting things.
Right.
Because they just assume one thing and put it down. Have you worked with many people on?
Not really. I mean, a lot of times I get phone calls when people are filling out their FAFSA to, what number do I use? What, where does this go? I don't have a lot of experience with the FAFSA myself, but everybody's goal is to get as much financial aid as they can. And the best way to do that is to reduce that adjusted gross income and that taxable income, which sometimes there's, for W-2 people, there's not a whole lot of ways to do that. But I know there are ways, there are things that FAFSA doesn't look at, which is outside of the tax realm, but, your retirement, your personal residence, those are things that they can't look at as analyzing your ability to pay.
Right. So in our world with maybe our listeners, when do they maybe it's not a good idea to sell stock during 1 year because it will report more.
Exactly.
So those are the kinds of things that we try and be aware of when people are when they have kids.
Right. Right.
So...
So in our world and financial services, Kim geeks out when it comes to the design, and investment strategy design and such. So what would you say you geek out in your world?
It's all geeky in my world, I think. What popped up on my Facebook feed today, or no, it was an email that came in my inbox that today being Halloween, that they couldn't find any sexy accountant costumes, but there were like other types of sexy professional costumes, but no sexy accountant. So
there was a sexy Mr. Rogers costume this year.
Wow.
Yeah. And they didn't have a sexy accountant costume. That's a crime.
I know, right?
Yeah. So, I mean, it's all pretty geeky, but I would say when I'm able to work with somebody in a planning process and help them meet a goal or educate them on something that they didn't know about that makes a difference to them, that makes my heart feel as good as it can with what I do.
Okay, so it's getting close to the end of the year, and some of our listeners have restricted stock units. They have been fortunate enough to have IPOs. This has been a great year for our local companies to go public. And so I'm thinking about how to finish off the year with less uncertainty when it comes to tax time in the new year. Is there anything that they can do ahead of time to prepare?
Sure. Yeah. I mean, avoiding those surprises is so important. I hate when my clients come in and I do their tax return and I give them the results and they're just flabbergasted at what I have to tell them. That's probably the hardest part of my job. But October and November are the perfect time to really look at your year, see what your income is, see what your withholdings have been. It gives you time to make changes to your withholding. It gives you time to sell stock, maybe that maybe you've got some large gains and you've got some losses that you could harvest against them. It gives you the time to do that. You can assess if you've maxed out your 401k. And still have time to be able to do that if you haven't. And it really just gives you the opportunity to prepare for what that tax bill might be, and make some adjustments if you can.
Yeah. So do you have a lot of people that come in and want to have estimates done?
I do. I have, I have clients that run the gamut, but most of my clients with the restricted stock units we work together at least once during the year, especially at year end, or right after their units vest. And we kind of talk about what that gain looks like, what the withholding has been. They get their investment advisors involved with, do I sell now and diversify? Do I hold and try to get that long-term capital gain rate? Lisa, can you tell me if I did one thing versus another? What am I gaining in tax savings by doing that, and weigh that against the risk of the stock going up or down. Lots of types of decisions like that where they have to work in conjunction with whoever their investment advisor is.
Are you seeing, are you seeing a lot when it's restricted stock units and they're selling some stock to cover the taxes? Is that, and I know it's kind of a generic question or whatnot, but are most companies doing it at a reasonable rate so that they're not shocked at the end of the year? Or are you finding that? Because I know that some companies do the minimum that they need to, and some differ in how much they withhold.
Yeah, generally speaking, for the clients I work with, I would say that it's still a little light. The withholding and the selling of the stock to cover is usually not quite enough. And generally, I think it's because, the employer doesn't know the whole tax story for that person. They don't know that their spouse makes $500,000 and puts them up into a 37% tax bracket or something. So selling a certain amount of stock or having federal withholding at the flat 22% is just not enough, especially here in California, where we've got two people working in a home and very high, high wages and high stock values.
So the minimum withholding that they can do is 22%.
It's usually a flat. Yeah, I think the default is 22%.
Okay.
And that was lowered in 2018 and 19. I believe they can elect a higher rate, but that's got to be elected to like a 27 or 28% rate.
Wow, that's really important for people to know that it is on the light side, and know that sooner than later,
right,
so that you can put some more money away towards taxes before the upcoming tax season.
Yeah. Last year I had a number of people very unpleasantly surprised, with $80,000 and $100,000 tax bills because their withholding had decreased so much from the previous year.
Wow.
And they weren't aware of it. They didn't know. They just assume it's getting done correctly.
Is it the same number for bonuses?
Yes.
It is. Okay. And then it would be the same number, I'm assuming, for IPOs when they, because it seems like they're taking out the same amount.
Right. Any amount that goes through the W-2 as like a supplemental wage, which would be anything other than your normal salary, is subject to this backup withholding rate, which is just like kind of a flat rate that applies to everybody regardless of whether they're single 0 or married 5.
And how about for California? Is there any special amount?
It is. California has a flat rate as well. I don't recall what it is, but it's 6 or 7%, I think, that they withhold at, which is usually much closer to, there's usually not as many shocking balances due on the California return.
Okay, interesting. Well, I would think that that's a big reason to do some planning at year end, is to make sure you're on target.
Absolutely.
And not going to have a big surprise.
Yeah.
Yeah. And some planning doesn't necessarily need to wait until the end of the year. So Kim brought up the IPO. And so if someone is participating and then they're part of a successful IPO, or let's say they win the lottery, right? So they have this windfall of money, what would your advice be in those situations?
I think depending on what the source of that income is, the advice could be different. When you win the lottery, that's free money. There's not a lot you can do there as far as holding to get a lower tax rate. So, winning the lottery would just be, how can I bunch my deductions? Now I'm in this much higher tax bracket. So should I think about donor advised funds? Should I think about investing in something that can provide me a deduction this year in the higher tax bracket than it would in the future? with stock options, it's really weighing, do I sell now or do I take that chance and hope for the windfall later and the lower tax rate by waiting a year?
Right. And that is always hindsight is 2020.
For sure.
Because the worst situation too is you vest that stock, you don't sell it, and then you take a loss, and now you have a loss situation. Whereas maybe I think that's a point of misunderstanding is when and again, I go back to restricted stock because I see so much of it, is that when you get that vesting date, it is like a company writing a bonus check to you. That's income.
That's income, period. Yep.
But I know a lot of times people think, oh, well, yeah, but I got hammered in taxes, so I don't want to sell it.
Right. Yeah. They really have to look at it as two separate transactions, right? The first transaction is you were given this compensation in the form of stock that went into your W-2 or your pay stub, just as if you had worked an 80-hour week and got paid a bunch of overtime. Now you've got this asset that you can make a decision on what to do with. And if you sell it immediately, then you have no capital gain or loss, and you may still have some tax due because, again, the withholding that they do on that compensation is not always necessarily enough in your particular situation. So then you're faced with, do I sell this stock and have the cash to pay my taxes, or do I hold it a year or 6 months, and what are the ramifications of that? If you hold it 6 months and say, now I need the cash, well, now you've given yourself a short-term capital gain if the stock has appreciated in value since it vested. That short-term capital gain gets taxed the same way as the wages. If you hold it for over 12 months, then it's taxed at a 15 or 20% tax rate. And if you create a loss, unfortunately, that loss is not going to offset that W-2 income from the vesting. And that's where people get in trouble, is they might sell too quickly and not write it out because they need the cash. And then they're faced with a short-term capital loss carryover that could go on for a very long time if they don't experience any more capital gains.
That's true. They're writing 3,000 losses for a long time.
Every year, yep.
Lisa, and are you finding that people, I mean, this doesn't sound very intuitive to me, from the standpoint that unless they're reading the fine print, I mean, do people come to you knowing this, or is that why they're working with you?
A little of both. Like, for example, when I referred to the man that I amended tax returns for, it was exactly that situation. He had his restricted stock units. It went into his W-2. He immediately sold them, and just assumed that 1099 he got reporting the sale of the stock was the same thing that was in his W-2, and he didn't need to do anything with it. But it was actually double reporting his income by him not factoring in that he had created some cost basis by having this W-2 income.
Wow,
So
I see.
it's
where
not
that
super
happens.
intuitive because it's kind of a double transaction that needs to be looked at separately.
Yeah, they do. You have to separate those two.
Yep.
And so when someone's coming to, let's say, schedules an appointment with you, calls you up and says, I need some help, what are some of the documents or what kind of information could they bring to that first appointment that would really, make things a lot easier for you?
Yeah. So usually a copy of their prior year tax return, at least 1 year, is very helpful because generally speaking, things don't change that much from year to year. So that's a good place for us to start. And I can see what they've done. And then we kind of talk about changes that have happened since then, goals that have changed, things that they're looking for, things that they would like from me, that they maybe haven't gotten in the past. And we just talk about, how we can work together. And a lot of times they'll bring their current information as well. And we can eyeball, withholding and income and try to figure out how things are looking or if we need to spend a little more time digging in.
That was funny. We just learned how we could find, because we're sole proprietors, right? I don't have a W-2 that I can say, here, I'm going to give it to you. So I have to constantly be looking at where I am with revenue and expenses.
Right.
And I just found on the software where I can pull my records out as if I could have a 1099 today. That was helpful for me
Yeah.
to see. But it's so what for those people that are doing consulting work, that's another topic that becomes, a little harder to manage. What do you recommend if you have somebody that's really like a sole proprietor, consulting, doing their own thing?
Right. I mean, that's really where more of the tax planning opportunities come into play, because you can look at timing of expenses and whether they should be in 1 year or the next year, depending on where you're expecting your bigger income to be. You can talk about retirement plan contributions, SEP IRAs, solo 401ks, defined benefit plans that they can put into place before year end. Various deductions that they might not even be thinking about. Some people don't have great tracking of their mileage, so can give them time to start thinking about, where have I been this year? Let me pull out my calendar. That's where the real tax planning can take place. And we can also look at things like, is being a sole proprietor the best thing for me, or should I incorporate, and what would that entail? And would there be a tax savings to that versus, what the administrative hassle might be? Mm-hmm. Yeah.
Another area that I just think of all of these things that maybe people want to hear about is, do you have any recommendations in terms of home purchasing? Is it better to do it at the beginning of the year or the end of the year?
Well, from a tax perspective, the more months you're paying mortgage interest, the higher your tax deduction is going to be for the year if you have 12 months versus 1 month. What I'm finding is happening since the new tax law came into play and people are buying homes here in California particularly, is that the mortgage interest deduction is limited to debt of $750,000 now, which here in California, when you can't get anything under $1 million, a lot of people's first mortgages are more than $750,000, and they're having a piece of their mortgage interest be non-deductible. And that's shocking for a lot of people.
Wow, I bet.
Yeah. Because our old number was $1.1 million. So it's still tough in California, but most people didn't butt up against that. You know. Some people did, but most did not.
So they had to, so now when they report, when the mortgage company comes back and gives you your tax form for the end of the year, they have to separate that.
They don't. The mortgage company will report the interest that they received, and then it's up to the tax preparer, whoever that may be, to know that might be a limitation. And there's new information on those Form 1098 mortgage interest statements that they issue. They're now printing out what the mortgage balances are on those. So that's going to give the IRS a clue. If they see $900,000 and the full amount deducted, they really need to look at what the date of that loan is and what mortgage limit applies to that.
So somebody doing their own taxes and didn't remember that law was just passed could just report the whole number of interest and maybe get audited in the future.
Possibly, yeah.
Oh, that's scary.
That's why you need to work with people.
Yeah.
I know that. So Lisa, we talked about how, tax law changes are going to take place and that you have to stay abreast of that. But in general, how has the industry evolved in the last 10 years or so since you've been in it?
Let's see. So I would say the biggest change has just been the ability to do so much online. I still meet with a ton of my clients face to face, but it's so much easier to have clients all over the state and all over the country now than there used to be. We can Skype. I've done Skype with clients. We do email. We have cloud-based, places that we can go and exchange files. And that that to me has been the biggest change.
Oh,
and trying to become more paperless within our own offices as much as we can, just to give us all the flexibility to work from wherever and access things from wherever we are.
That's the truth. I thank technology so much for allowing me to work wherever I want for the most part.
Yeah, and this is one of those areas where I think that the two professions really kind of marry each other a little bit in the embracing of the technology, to maintain that relationship with people and still be able to serve them, where their location isn't as much of a factor as it used to be.
Right.
So not necessarily needing the face-to-face as much as the face-to-face, even whether it's virtual or real.
Right.
I mean, we're seeing it a lot. And I'll tell you, LinkedIn is a certain area that we see it just because, from time to time we may get a referral and it says, would you like to work with somebody in person or not? And most people these days are like, it doesn't matter to me.
Mm-hmm. Mm-hmm. Especially when I think it's a referral. That's what I find is when somebody has referred somebody to me, they feel more comfortable not having to meet me face to face versus somebody who just finds me online or via Yelp. They want to put a face to a name and get that vibe from me. I think that they can feel comfortable and trust.
Yeah. Yeah. And I think that that's so important. And a lot of times I'll put on my video camera on my screen if I'm meeting somebody online, because I just want them to see that I'm a person, a human behind the voice and the computer, right. That there is really a me. And I love when they do that too, because then it just makes the relationship more real.
Exactly. And I definitely find I remember more when I meet people in person. I remember their kids' names. I can kind of remember their emotions because I'm able to just see their what they do with themselves physically, not just trying to read over the phone, what they're saying in their voice.
Yeah, boy, that's so important when it comes to money is tone and
body language.
Yeah. Victor, you're really good at that.
We sit there. Well, Kim and I used to do a lot of appointments together, and it was really interesting because we would sit there, whether it was someone who we were developing a relationship with. And Kim would ask all the same questions. We had a questionnaire. We'd write it down and such. And as she's asking these questions, I'd be watching and observing and such. And at the end, we would share notes, and say, well, what did you think about this response? And it could have been two different complete meetings, from the standpoint that you had the response and what was written down on a piece of paper, but you could read the intent and the body language was telling something completely different. And we would share, we would talk to each other so we'd get this full composite who we were working with. And it was a dynamic. I thought that was a lot of fun. That's where awesome. I geeked out. That was the area where I geeked out. Yeah. Yeah. So this has all been really great information. And you mentioned, since you can work with people, whether it's through Skype or different, and apparently there's different ways that people can get referred to you. But what would be the best way for someone to get in touch with you if they'd like to learn more about you and your practice? Sure.
So I would say, reach me by phone. My cell phone is 408-612-7637. I prefer phone calls and email over text. I feel like texts get lost, but and then my web address is taxproscpa.net, and all my contact information is there.
I tell you, one thing that I really appreciate working with you and asking questions is I feel like you do simplify the matter, even though there's a lot of detail behind it that you're thinking about. That I just have to say that I appreciate that, because there's a lot of nuances here and there, and sometimes I just need an answer. Yes or no?
Yeah. Thank you. I try, and I try to gauge each person that I'm working with and how much information they want and what they feel comfortable with. And I like everybody to, some people want to understand the reason behind an answer, and I'm happy to try to teach somebody that if that's what they want.
Yeah. I've always said, and I've told the kids this, that the true mark of a professional is someone that makes something really difficult and complicated seem simple and easy. And so, the fact that you can do that, and in some cases dumb it down for someone who just doesn't understand it, right? But be able to explain it, and knowing that it's coming with this backing of knowledge and information and experience makes a big difference.
Right.
Yeah.
Right.
It's funny. I always ask the doctor when I'm going there, and they'll say, "Oh, well, this is what's wrong with you," or you're, something. I said, "Well, how do you know?" because you came up with that answer so quickly. I want to know that there was some science behind it all. And then they go through the process, and then I'm like, and then I'm comfortable. But I just, because it's so so foreign to me, I just want to know that there was some thought behind it all.
Yeah, couldn't have been that easy, right?
Yeah.
It's so complicated. Well, I think we have a tendency too of overcomplicating these things because they're overwhelming, especially if it's not something that you're comfortable with. Like, I'm not comfortable with taxes, but that's why we work with someone like you, Lisa, to help us demystify it, and so that we don't make mistakes, and I don't have to read tax laws because you're reading tax laws,
Right?
So that provides a lot of comfort for me.
Yes, especially this last year, because it was totally different.
It was.
Yes.
Now, turning to different, we have some additional questions for you. Now, these, of course, are a little bit more fun,
Okay.
hopefully. But the first question is, what is a favorite vacation destination?
So I'm not much of a traveler, but I love to go to San Diego.
Oh, keep it classy, San Diego. I love San Diego.
We do too. We're like, maybe
It's just-
someday.
It's just such a relaxing vibe there. It's got great weather and relaxed people and so much to do.
Yeah.
Yeah.
What part, is there a certain part of San Diego that you like most?
My favorite place to go is Seaport Village.
Okay.
Yep. And it's just a tiny little spot on the water, and there's shopping, and there's always somebody playing music or some kind of entertainment going on, and lots of yachts and boats and sailboats in the water, and it's just a comfortable place for me.
Yeah.
Oh, that's cool.
Yeah, to me, that is like when people everywhere else in the country envision like California, it's exactly like that San Diego vibe, by the ocean, just laid back.
Yeah.
Right. Waves and good food, fish tacos, and
Yeah.
just chill.
Yeah.
Second question is, do you have a favorite, what would be a favorite book or maybe a show you've been binging on Netflix that you really like?
Let's see. So I don't watch a whole lot of television. But the one thing I do watch, and that's on my DVR all the time, is General Hospital. I have been following this forever. And I currently have 17 episodes that I haven't watched because I've been too busy. But I have been a GH fan for like 30 years.
Wow.
Oh my gosh, seriously, I remember recording it back when we finally got VHS
a VCR?
machine. Yeah, back when I think I was like in 5th grade.
Whoa.
Luke and Laura.
The wedding? I knew about that wedding.
And then Luke disappeared, or he was dead, and then he came back. Or no, maybe that was Laura.
Laura's the mayor now.
No way. Maybe I should get back into
Get
that.
back into it.
She's the mayor.
She's the mayor of Port
The
Charles.
mayor.
I love that.
Wow.
I love that. That's hilarious.
That's funny.
Yeah.
Well, good. And you admitted it on a
admit it.
podcast. For the record.
That's my guilty pleasure,
There
I
you
guess.
go. Hey, that's good. It could be worse, right? But, well, that's good. And then the last question is, do you have a favorite app on your phone? Something you just couldn't live without?
There's a few of them.
Oh, go tell us.
So find friends, because I can never find my son. And so it's important that I have that.
Yes.
He's 14. I also have an app called Tiny Calendar that I use as my calendar, and I really like that. And I guess I should probably say my Canopy Tax app. That's my online portal. And there's an app that goes on your phone, and people can use that to upload their documents, and I get notifications, and it's pretty simple. But I don't use it a ton, but that's my shameless plug for my for the app I use in my practice. So
Well,
That's
awesome.
awesome.
Yeah, that's good. Well, I'll be sure to include in the show notes for the podcast your contact information in case people would love to get a hold of you. But, on behalf of Tech Girl Financial, we really want to thank you for coming and sharing your insights about the world that you live in. And once again, thank you for loving taxes. Keeps us from having to have to love them. But we do want to definitely remind everyone, if you have questions or if you have comments, suggestions that you have for the show, please use hashtag AskTGF on Twitter. And we certainly do appreciate you listening. We hope you're enjoying this financial professional series. We do have a few more people that we're going to bring into the show over the course of the next couple of weeks. But we really wanted to get Lisa on the show just because I think, like I said at the beginning, our worlds kind of commingle quite a bit.
Absolutely. It makes a relationship so much stronger when I am working with somebody. I know their CPA, and we can all discuss things for the benefit of the client together.
So thank you, Lisa, for joining us.
Thank you so much for having me.
Yeah, I can't wait to text my sister and tell her Laura's mayor.
And on that note, we want to thank you again for listening to Tech Girl Financial and our podcast. And we remind you, what would you do
when your money works for you?
We'll see you next time. Thank you. Bye.
If you have questions, comments, or suggestions for future shows, please send an email to victor@techgirlfinancial.com or join the conversation on Twitter using the hashtag AskTGF. We also encourage you to follow us on the Tech Girl Financial page on Facebook and connect with us on LinkedIn.
Securities offered through registered representatives of Cambridge Investment Research, Inc., a broker-dealer member FINRA SIPC. Investment advisory services offered through Cambridge Investment Research Advisors, a registered investment advisor. Tech Girl Financial and Cambridge Investment Research, Inc. are not affiliated companies.
Skrrr.